So the biggest news that we're seeing right now is just tariffs. The Federal Reserve can come in right now and say, I won't say whatever they want, but they can come in and say, well, we're just going to be dependent on what the government does in regards to tariffs. And that's what they're going to do. And they're going to just keep kicking that can to basically push all the pressure over to the president. Now, you're going to really need to focus in on what the president is doing with the tariff situation and the big, beautiful, I reference it that way because it's not what I think, folks. It's just what everybody's calling it, big, beautiful tax bill. We're going to have to see what happens to both those things. The big, beautiful tax bill, we're going to have results on that fairly quick, I'm assuming, and to figure out what directions that's taking. So now on the other side of the coin, where is this going to take us midterm and long term? Okay, so if tariffs can basically subdue themselves a little bit, if we can get to that 10% basically blanket tariff all over the country, a lot of analysts then can plug in those numbers and say, okay, here's what we're expecting to happen throughout the economy based on this information. And that's what we're really focusing in on. Because big pieces of this puzzle is going to be the inflation number that the Federal Reserve monitors, coming in right there, but they're really going to be focused in on the jobs report. They're waiting for jobs to just crumble because right through here, we had some numbers coming in this week. We'll go through here. Durable goods orders right through here. Here's the scary part with this folks, is durable goods orders. There was a positive 7.6 increase previously. And there's a negative 6.3. These are orders. These are coming down the pike. So if the orders are starting to way slow down, then the labor could potentially slow down accordingly. So we're going to focus in on the labor markets as well as tariffs to really find out what's going to go on with interest rates. And that's why you guys need to show up every day, because I'll do all the research for you. Watch me for 8-9 minutes each morning and evening, and you're going to get the gist of what you need when it comes to real estate. And we also talk about investments here. So let's get over to the stock market. We have green. Well, we'll just say basically this is flat across the board. When's the last time you saw the NASDAQ down 4 points? 4 points. So the market right now is waiting for what? It's waiting for NVIDIA earnings. So they're coming out after the bell. So I'm expecting the markets to be completely flat unless there's something down through here when it comes to tariffs or some inflationary numbers that we're just missing, but there's really nothing that should be out today. Abercrombie & Fitch soars 25%, even as retail slash profits outlook due to tariffs. So as soon as the tariffs come off of this, we're going to see some basically major activities in the market. So let's go over what I'm expecting short-term, mid-term, and long-term. But we're going to go over to the bond market first because we have to figure out what's going on with these things. So right now, we're looking at mortgage rates. So we look at the MBS market. This is a mortgage bond that trades on Wall Street. Let's just get to the one-day chart. It is down 9 ticks. Well, we had a fantastic day yesterday. Look at the 2-day chart. So we moved way up. And now we're giving back a little bit of that. Couldn't it reprieve? It'll probably reprieve right back down to about here, 98.5657. And then we're going to see if that's going to give us basically a floor right there when it comes to trading. So see how it's stopping right there? We're hoping that just stops and that gives us a floor where we can continue to bounce off of that.